Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning, lots of news to digest. Of course, we had a week closing yesterday as well. We saw the Nifty plunge below that 19,400 mark as well. So we'll have to digest global cues coming in. They're fairly mixed, and of course, GIFT Nifty also hinting at a muted start. Lots of earnings to watch out for, and of course, all your queries that will be addressed on the show. So if you have them, send them in to us on our YouTube feed and we will take it up with our technical expert on the show. But of course, before we go ahead with all that, let's take a look at the top stories at this hour. Wall Street ends lower as rising yields weigh on stocks. Among key earnings, Amazon and Apple beat expectations. Meanwhile, Bank of England raises interest rates by 25 basis points on expected lines. Asian markets, on the other hand, opened mixed this morning with the GIFT Nifty hinting at a flat start for the Indian market. Oil prices gain after Saudi Arabia extends its output cut and Russia decides to slash exports. In fact, Brent is above the $85 mark a barrel. Meanwhile, gold is near a 3-week low amid higher yields and a stronger dollar. Eicher Motors' first quarter earnings beat expectations with highest ever sales in the bus division and strong Enfield volumes. Telecom major Bharti Airtel also reports a beat across parameters with ARPU touching 200 rupees per month. Zomato delivers a surprise profit of 2 crores in the quarter gone by, sets an ambitious goal of growing its core food delivery business at 25 to 30% in FY24 and FY25. And big day on the earnings front, SBI's first quarter profit may double on the back of strong loan growth. Meanwhile, M&M and Britannia also slated to report their first quarter numbers today. Let's first get in our technical expert on the show then. Raja Venkatraman, who is the co-founder of Neo Trader, is joining in this morning. Good morning, Raja. Couple of days of heavy selling coming in. We've broken below that 19,400 mark as well. The 20-day EMA, that is placed around 19,160. Would you expect that level to, be breached in the coming sessions? Or would you say that there is some bit of buying that could come in, given the fact that, experts do say that we are looking a bit oversold at these levels?
Yeah, good morning, Nandita. So, like we have already seen over the last few days, the last 3 days, we have had successive red days, and which is clearly a state of overbought zones, which had the market had definitely entered into, and there was some selling which was envisaged, and that did occur on back of global cues or any other reason. But then now, after seeing this strong downward trend over the last few days, I do feel that considering today being the last trading day of the week and also some strong results like you rightly mentioned are expected today, we may see some short covering action. Now, this could be termed as a short covering action rather than some genuine buying. The reason being that, we are nearing towards the end of triggers from the result season. So one has to be careful as we are entering into the month of August. Because based on my time cycle studies, I feel that yes, we could be entering into a volatile zone. Markets may not turn overly bearish because I do still feel that unless the 19,300 level is decisively broken, we should not take this phase to be a bearish scenario. But yes, there is definitely some profit booking. Now, what we need to see here is yes, Bank Nifty has broken an important support at 45,000, and it would now wait for it has passed the baton now to SBI, and if SBI comes up with stellar results, then we could see some recovery in Bank Nifty as well, and that's what the market is hoping for. So considering all that, and also looking at the kind of PCR levels which is right now at 0.80, we don't see that a lot of short position has been created yet. We need to see now how all these things are being put together by the end of the day to really take a call on what's going to happen next week. But then, yes, I recall and I concur that there is going to be a volatile scenario. So one needs to keep booking profits at regular intervals.
All right, one needs to keep booking profits at regular intervals. That's the thought on the Nifty and the market as such. But hold that thought, Raja. We'll come back to you and discuss more stocks as we go along the show. But let me also bring on board my next guest for today. Independent market analyst Mahantesh Sabarad is joining in this morning. Good morning, Mahantesh. After coming very close to that 20,000 mark, of course, we've seen a fair bit of selling come in, especially since the last two sessions after the Fitch downgrade of US credit rating. That's when the deep sell-off started. But would you expect some bit of buying to come in now? And if yes, what are the pockets one should be looking at this juncture?
So good morning, Nandita. Thanks for having me here. As far as the Nifty reaching or topping 20,000 once again, that question it can be easily answered if we look at what's happened in the last 2-3 months. There has been a strong FII inflow which we saw in the previous 2 months, and that triggered the up move for the Nifty. Not only that, we've had certain results come in which were relatively very good, I would say. Many of them sort of done well over the base effect. There is a base effect, of course, one needs to acknowledge that. But having said that, many of the results are so good that the managements are talking about an upbeat outlook going forward. And thirdly, we have overall inflation outlook, not just for India, but globally softening, which tells us that the risk-taking ability of investors will start growing. So I'm pretty sure that if not next month, we will have an up move come in the markets over the next few months to take it beyond 20,000.
Right, that's the view on markets then. But I want to get in your thoughts on some of the earnings that have trickled in. Of course, Bharti Airtel has reported numbers, strong subscriber addition, industry-leading growth. Even though profits got a little impacted by forex loss on a quarter-on-quarter basis, but average revenues have also been strong and have reached 200 rupee mark. Given the fact that, there is a situation of duopoly building up, given the kind of issues that Vodafone is facing, how well do you think Bharti is placed, in the entire landscape when it comes to the telecom space? Because, of course, there is Jio as well, right? So, where do you see Bharti heading after the kind of earnings that have come out for the quarter gone by?
So single biggest metric one should look at when it comes to the telecom metrics is telecom companies is the ARPU. You go back 3-4 years when Vodafone troubles really started. The whole issue was about whether the industry will have a sustainable growth in ARPU or an increase. And we have seen that thanks, or you can call it market dynamics, thanks to the duopoly, the ARPUs have indeed risen. That Bharti has reached a 200 rupees ARPU level, which was quite unthinkable 3 years ago, is a great achievement, I would say. And now that we are at the cusp of overall 5G deployment, better technologies therefore coming in, and a lot of interest coming in spaces around the telecom sector. You have AI, you have IoT, you have fintech. You have increasing digitalization. All these, market forces will drive the telecom growth ahead. So we have had price growth thus far. We have had a muted volume growth now in terms of subscriber addition, not necessarily in terms of data consumed or minutes consumed, but we have had muted volume growth. Now we will see a situation where there will be substantial volume growth coming in, not necessarily through the subscriber addition route, but driven by all these trends that we are witnessing right now. So for me, I will continue to watch the RPU metric, but once it sort of touches 220 or 230 thereabouts, it's all about whether they can up their volume gain.
All right, that's the view on the telecom space. But let me also talk about Eicher Motors, given the fact that it has handed in a very strong set of numbers, highest ever quarterly revenue, strong Enfield volumes. But let's not forget that there have been new entrants in the premium bike segment where it has been a leader till now. But now, of course, with the likes of Bajaj Triumph and Hero Harley, people are coming after, in fact, competitors are coming after Enfield's profit pool, so to say. Market share risks going forward for Eicher, even though the quarter gone by has been pretty good, but in the coming quarters, some pressure that can be expected?
This perspective, you should remember that, of course, it had a monopoly in the high-end kind of bikes or higher CC motorbikes, what they used to call as middleweights. The question that we need to answer is that while all this is fine, the competition comes in, probably the market grows along with the competition, and obviously market share losses will be at Aisha's doorstep. Having said that, the key metric one should look at going forward is how will the company manage its ROCE trend. Remember, they have had an investment in a fresh new plant or fresh plants, I would say, in the last few odd years. The ROCs of the company in the interim had actually dipped from the historical highs that we used to have. So if that ROCE trend improves in spite of a loss in market share, which could be a phenomenon of overall market growth, so therefore better pricing or better volume growth itself, which will aid operating leverage, we should see Eicher doing better and better. So I'm not worried really by the term that you use that there will be a division in the profit pools of Eicher Motor. I would rather focus on where the ROCE trends would be for the company going ahead.
All right. Before I get in a question on Zomato, I want to talk about Maruti. Numbers were pretty good, but there, of course, were concerns about its, decision to buy out 100% stake in the Suzuki Gujarat unit, right? There are concerns over whether or not that will lead to a significant cash outgo for the company. And now there is, the factor that the company will be, the board will be meeting rather on the 8th of August to decide the mode of payment for this stake buy, right? It could either be via cash or via preference issue of Maruti shares to Suzuki Motor Gujarat. But do you think this will be an overhang for the stock going forward? Because there are concerns over significant cash outgo of somewhere around 900 crore rupees or thereabouts for the company. That is, of course, being flagged by brokerages. What are your own thoughts?
So it's a classic flip-flop by Maruti. Okay, years ago when they announced the Gujarat plant under the Suzuki's ownership, there was a lot of hue and cry that was created, and the company took pains to meet individual investors, not just individual institutional investors, one by one, and painfully explained the process, painfully explained how it will be beneficial for Maruti shareholders, and the institutional investors caught on to that. Now there is a flip-flop that has happened. I don't know what these institutional investors look forward to now. Now that they had bought that argument several years ago about Suzuki's plant under the garb or under the explanation that said you have access to cheap Japanese funds coming in, why should Maruti invest and depress its ROC, that will be a rising ROC trend, and so on and so forth. Now we are seeing this classic flip-flop. I'm really concerned about the corporate governance aspect, and I'm also concerned about how institutional investors will go back to their investment committee and explain how they will continue their investments in this company. In the meantime, Maruti has done really well when it comes to its overall sales, overall progress on the automobile market in terms of gaining market share on the utility vehicle side. But their vision in terms of what they want to really do in the country is somewhere punctured by flip-flops.
Right, that's one development, of course, that the market will be closely watching out for with respect to Maruti. But let me get your thoughts on Zomato. Given the fact that it has reported its first ever profit of profit after tax of 2 crore rupees, and Street has, of course, saluted the numbers. This morning I was reading some brokerage reports. JP Morgan is overweight on the stock target raised to 100 rupees per share. In fact, it believes that it should reinforce investor faith in the company. The fact that Blinkit has clocked in strong growth and will continue to do so in the coming quarter. In fact, it has also raised its revenue estimate by 5 to 8% and margin estimate by 120 to 400 basis points. All the other brokerage houses as well, mostly positive, UBS as well. And Nomura, however, has a reduced call with a target price of 60 rupees. It believes that sustaining the high gross order value growth for long term could be a challenge for Zomato. What are your own thoughts? Do you think things have turned around and, we are firmly in the green?
So there are two things that we need to really examine. The management has given a guidance of a 40% growth going ahead sustainably for the next few quarters. Second, they are saying that their margins will improve from 2.5% to 4 to 5%. Now, these guidances are great guidances for a company which was not too long ago in the negative, both in terms of margin and was suffering lower growth, especially on its food delivery business. Now that they have brought in a Blinkit, they have a good growth coming in from quick commerce and so on and so forth. The consolidated entity for Zomato is now on a stable wicket when it comes to the growth. Margins are likely to improve, and that margin is not going to come from its core business, which is food delivery per se. It will come from increased ad revenues that they come. If you follow the metrics that the company uses, they report a revenue, but they also report what is called as an adjusted revenue. Now, there is a big play of ad revenues, in-app ad revenues that they have, and all their partner restaurants or partner stores actually participating in advertising. So to me, that's a great news for the company, and therefore could signal better growth ahead and closer to what they are talking of in terms of 40% growth on the top line. That said, the worry is what happens to their core business, which is food delivery. Now, food delivery has been growing slower relative to the overall company's growth. And there are analysts have raised doubts related to that growth on the food delivery aspect. Now, if you drill down into the numbers, the monthly or active customers or monthly average users, if you want to put it that way, has really not grown for them for several quarters now, particularly on the food delivery side. But the average order value.
Mantesh, I'm so sorry, we are actually running out of time. We'll touch base with you again and discuss more stocks. But thanks a lot for taking our time and joining in this morning. With that, let me go back to Raja and talk about specific stocks. Raja, stock of the day for me today should be SBI, given the fact that profits are likely to double on a YOY basis, and loan growth expected to remain strong. Asset quality likely to remain stable, although margins may come under a fair bit of pressure. 20 bips decline is what brokerages are penciling in on a quarter-on-quarter basis. What are your thoughts on SBI? How should one position ahead of earnings?
Yeah, SBI definitely is positioned quite well, and after the strong rally which we saw since June, the stock has corrected nicely. Plus, kind of positive news flows that are coming in, and with also the inclusion in the global bond indices, SBI is talked to be benefited the maximum, and all this is helping the growth of SBI. And I continue to believe that this dip is a good buying opportunity for us, and one should be looking at SBI. And I believe that the rally from here on could challenge the previous highs towards 625 in the next couple of days.
Right, that's the view on SBI. Then let me take up a few queries that are trickling in this morning. The first one is coming in from Hari Shankar, wants to know your thoughts on Vedanta. He wants to know if this is the right time to buy, given the fact that the counter has come under a fair bit of pressure. Yesterday, of course, there was a block deal, but reports suggest that the demand wasn't really there for that. How would you look at a Vedanta now? Would you say it's time to buy into it, or should one steer clear?
Yeah, Vedanta is a stock from the metal space which does not really give you the return you expect on the long side. it's definitely a good candidate on the short side, and I truly believe that every rally which has the stock has witnessed, it has only witnessed supply at higher levels. So one should not be looking at this counter from an investment or long perspective. But if you are from the short perspective, then this account is definitely go. You can use the rally towards the region of around say maybe 270 to 275 as a shorting candidate.
All right, that's the view on Vedanta. But sticking to the metal space, we have a query coming in on Hindustan Copper from Harshal. He wants to know your thoughts on this counter. Last 5 days, the stock has jumped 20%. It is, it's higher copper prices aiding the stock rally as well. Would you say wait it out to buy, or it's time to go all in?
Yeah, like you rightly said, it's a mix of both. You got to this stock has definitely taken advantage of the higher copper prices. One should look to buy at current levels, use declines towards 130, because that is only the suitable support levels which are emerging, and continue to look for an upward drive towards the region of 240 within the next 1 year.
All right, levels of 240. That's what Raja sees on the charts of Hindustan Copper. Let me take up a query on Adani Power. This is coming in from Madineni Lakshmi. Wants to know your thoughts on this stock. Of course, yesterday it saw a good spurt, up somewhere around 3%, and last 5 days also it has gained somewhere around 10%. Would you say this stock is worth betting from the Adani basket of stocks?
I would not wager either from the Adani basket or from the power sector. The power sector has been doing really well, and if you are looking to trade the Adani basket, then this is not the stock to be in. If you want to go for the Adani basket, go for Adani ports, because after a strong range bound session, it has given a good breakout. So you can consider Adani ports, and if you want to go for the power sector, go for rural electric, RECL.
All right, that's the view then. Hope that answers your query. Let me take up another query. This is coming in from Suresh Shankar. He has 3 stocks from the realty basket: DLF, Godrej Properties and Oberoi Realty. And he's making a profit of somewhere around 16 to 18%, with regards to his portfolio. He wants to know whether he should exit at these levels, or should he, hold on for the long term.
Yeah, you should exit all of them, because I see some struggle emerging in the realty space. They are headed for some correction right now. So it's best to exit at the current time. All
right. One last query then. This one is coming in from Debu K. Wants to know your thoughts on Dixon Tech. Any thoughts as to where this stock is heading from current levels, Raja?
Yeah, this stock has shown some great promise, and yesterday a sharp rise which we have seen could challenge its higher levels. So one should, if you're going to make a fresh entry, then this would not be the appropriate time. Use once again a dip towards 4,000 as an entry point. But then if you are looking to, if you are already holding this position, so I'm having 2 answers here. If you want to buy, the dip levels are 4,000. If you want to exit partly at 4,700, and then if you get a closing above 4,700, this stock would go all the way till 6,000. So it's heading towards a very strong move. The sharp rise which we have seen over the last 2 months seems to be sustaining, and this stock is definitely in a strong bull zone.
All right, Dixon Tech in a strong bull zone. That's the view. I hope that answers your query. But with that, we have come to the end of this query segment. Raja, before I let you go, what are you recommending for our viewers this morning?
Yeah, so like you have started the day with SBI, so I have a buy call also on SBI. Buying at current levels, stop loss at 585 for a target towards 620. A stock of BLS International, buying it at 242 with a stop at 235 for a targets towards 252 and 258. And one sell in realty sector, Godrej Property, at 1575 with a stop loss at 1590 for a drop to 1555 and 1540.
All right, those are the stock recommendations coming in from Raja this morning. With that, Raja, thanks a lot for taking out time and joining in this morning and answering all the viewer queries as well. Wish you a very profitable trading day and a very happy weekend as well. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for watching, but don't go anywhere because coming up next is Opening Bell.